In the heart of West Africa, a quiet but powerful transformation is unfolding, and its ripples are beginning to cross borders, capturing the attention of governments, investors, and communities alike. In Ghana, a bold experiment in managing one of the region's most valuable resources, gold, has begun to rewrite the story of artisanal and small scale mining. Once plagued by smuggling, opaque dealings, and a lack of government oversight, the sector is now proving to be a gold mine, not only for the miners who dig and wash the ore, but also for the government seeking to capture the true value of its resources for national development. Before we dive deeper into today's update, take a moment to like, share, and subscribe to the channel. Your support is key to helping us grow and reach more viewers like you. Don't forget to hit the notification bell so you never miss out on exciting updates. This transformation, led by Ghana's Gold Board under the leadership of Chief Executive Officer Sammy Gyamfi, has drawn the keen interest of Sierra Leone. Our Finance Minister Sheku Fantamadi Bangura has stepped into Ghana's corridors of power to explore how this model could be transplanted into his own country's mining economy. The stakes are monumental. For decades, the artisanal mining sector across West Africa has been both a blessing and a curse, creating jobs for millions, providing livelihoods for rural communities. But at the same time, fueling smuggling networks, enabling unfair pricing, and depriving governments of badly needed revenue. Sierra Leone has long battled these contradictions. But now, as Bangura sits across the table from Ghana's Gold Board executives in Accra, there is a sense that something groundbreaking is taking place. He describes Ghana's approach as an innovative step to formalize and strengthen its gold sector. And in those words lies both recognition and aspiration. For Sierra Leone, adopting Ghana's model could mean the difference between continuing to lose millions in unrecorded exports or finally seizing control of a resource that has defined its economy for generations. The success that Ghana has demonstrated in such a short period is nothing short of remarkable. Since February 2025, the Gold Board has aggregated and exported artisanal gold worth an astonishing GHM 40 billion, roughly 4 billion US dollars. What makes this figure so compelling is not just the raw number, but the context. This is gold that would otherwise have slipped through the cracks, siphoned away by smugglers, undervalued by middlemen, or traded in informal markets beyond the reach of government regulation. Instead, it has been documented, centralized, and exported in a manner that gives Ghana both revenue and credibility. Government projections estimate that annual revenue from small-scale mining operations could soar to $12 billion if this system continues at its current pace. For a sector once dismissed as informal and disorderly, this is nothing short of a revolution. At the heart of this new framework is the Gold Board Act of 2025, known as Act 1140. This legislation dismantled the patchwork of licenses and informal trading arrangements that had long governed the sector, replacing them with a single, centralized system. All existing gold trading licenses were annulled effective May 1st, 2025, creating a clear legal line between those who operated under the new digital licensing system and those who persisted in the shadows of illegality. In one bold move, Ghana sent a message not only to miners and traders, but also to the international community. The era of unregulated artisanal gold trade was over. This was not just a matter of law enforcement. It was about reimagining how small-scale mining could be structured to benefit everyone involved, from the miners with dirt under their fingernails to the central bank and treasury officials tracking revenues in Accra. For Sierra Leone, these reforms strike at the heart of its own challenges. Rampant smuggling has drained its mineral revenues for decades. Gold is mined in remote corners of the country, moved clandestinely across porous borders, and sold cheaply in underground markets. The government loses millions of dollars annually, while miners receive little beyond survival wages. Weak regulatory frameworks mean that even when exports are recorded, they are often undervalued, depriving the state of taxes and royalties. Adopting Ghana's model could flip this dynamic. By centralizing gold purchases, introducing digital licensing, and enforcing assaying and traceability systems, Sierra Leone could bring order to its chaotic gold sector. More importantly, it could ensure that the wealth generated from its mineral resources is not stolen away in the dead of night, but used to build schools, hospitals, and roads. But beyond numbers and systems, what makes Ghana's model stand out is the philosophy behind it. Instead of treating artisanal miners as a problem to be solved, it embraces them as stakeholders in a structured economy. A revolving fund has been established to purchase all gold produced by small-scale miners, ensuring that miners are paid promptly and fairly. This injects liquidity into the sector, builds confidence, and eliminates the need for miners to turn to shadowy buyers offering cash on the spot. Weekly gold purchases have already doubled from 1.5 tons in January to over 3 tons projected by the end of the year. This scale of growth demonstrates how quickly confidence can shift once miners believe they are part of a transparent, supportive system. The Gold Board's vision extends even further. Plans are underway to launch a national traceability system, ensuring that every gram of gold can be tracked from the point of mining to the point of export. Environmental compliance programs are being rolled out to ensure that the sector does not just generate wealth, but also respects the land and communities it depends on. Geological research is being supported, providing better data for both the government and investors. And beginning in October 2025, local refining will commence in partnership with the Bank of Ghana and domestic refineries, allowing the country to capture even more value from its gold before it leaves its borders. This integrated approach, spanning financial systems, environmental responsibility, scientific research, and industrial development, offers a blueprint for how artisanal mining can be transformed from a lottery of chance into a systematic engine of growth. Sierra Leone's finance minister Bangura sees this potential, but he also knows the road ahead is fraught with challenges. Unlike Ghana, Sierra Leone does not yet have the infrastructure to support widespread gold assaying and export management. Its regulatory capacity is weaker, and informal trading networks are deeply entrenched. These networks, having operated outside government oversight for decades, will not simply vanish at the stroke of a pen. For Sierra Leone, success will depend on building capacity, investing in infrastructure, and perhaps most importantly, demonstrating political commitment. Without the will to enforce reforms, even the best designed systems will fail. Timing, however, may be on Sierra Leone's side. Global gold prices remain elevated, driven by economic uncertainty and investor demand for safe haven assets. This price surge has increased incentives for both formal and informal mining operations across West Africa. Ghana's ability to capture value from this surge through its aggregation model shows what is possible when structures are in place. Sierra Leone has a chance to do the same, turning today's high prices into tomorrow's development gains. By ensuring that the wealth generated flows through official channels, the government can maximize revenues at a time when every dollar matters. The collaboration between Ghana and Sierra Leone also carries broader significance. It signals a shift in how West African nations are approaching resource governance. For too long, countries have operated in silos, each grappling with the same problems of smuggling, illegal mining, and weak oversight. By sharing knowledge, experiences, and best practices, they can begin to craft regional solutions that reflect the realities of artisanal mining. Ghana's success has already sparked interest beyond Sierra Leone, with other nations quietly watching to see if the model can be replicated. If successful, it could set a precedent for how resource-rich but revenue-poor nations can finally begin to capture the benefits of their natural wealth. For Ghana, this success is also deeply political. President John Dramani Mahama has made economic revitalization a cornerstone of his administration, and the establishment of the Gold Board is one of its flagship initiatives. By transforming artisanal mining, the government has not only boosted revenues but also demonstrated its ability to take bold action against entrenched problems. This builds confidence both domestically and internationally, sending a message that Ghana is serious about managing its resources responsibly. The model's early success has already begun to reshape perceptions of the small-scale mining sector, once seen as chaotic and informal, now viewed as a structured contributor to national development. As Sierra Leone weighs its options, the lesson from Ghana is clear. Reform is possible, but it requires vision, commitment, and investment. It is not enough to pass laws or sign agreements. The real test lies in implementation, in building the systems, enforcing the rules, and winning the trust of miners who must see the benefits firsthand. If Sierra Leone can rise to this challenge, the rewards could be transformative. Revenues could increase, smuggling could decline, and the gold sector could become a pillar of economic growth rather than a source of lost potential. The story unfolding in Accra and Freetown is more than just a tale of mining reform. It is a story about how nations can learn from one another, how innovation can replace inertia, and how the wealth beneath the soil can finally be harnessed for the people who live above it. As Minister Bangura and his team continue their consultations, the possibility of a new era for Sierra Leone's gold sector is taking shape, one that echoes Ghana's success, but is tailored to Sierra Leone's unique context. It will not be easy and it will not be quick, but the foundation is being laid. For now, all eyes are on Sierra Leone to see if it can follow in Ghana's footsteps. Will it embrace the bold reforms needed to centralize and formalize its gold trade? Will it invest in the infrastructure and capacity required to sustain such a system? And most importantly, will it demonstrate the political will to take on entrenched interests and rewrite the rules of the game?
If today is your first time watching this channel or you are returning to this channel for the exciting content, please subscribe to the channel for more educative and developmental projects across Ghana and Africa as a whole. Do you want to know about the state of a project in Africa? Then make sure to like and comment the name of the project you would like us to talk about and its current state.